this is Dennis Wilburn with the Active Trend Traders. Welcome to another tech tip from the Active Trend Trading. Today I'm going to be addressing what do you do when you miss the entry. You've been watching a stock or an ETF and you've been waiting for the setup, and you go on vacation or you just sleep in one day, miss the market open, and you miss the move, or at least you think you do. So that's what we're going to cover real quick. Hey, remember that all the materials that we do present with the Active Trend Traders are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. So what do you do when you miss a signal? No matter how good a trader is, we will always miss signals. But sometimes it can get to such a point that you just want to almost pull your hair out, like this guy right here. Just going, I missed another signal. What do I do? And what inevitably happens when you miss a signal? The stock or ETF continues to run up 10, 15, 20%, and you just go, you want to say bad words, but I'm encouraging you not to say bad words, but learn how to deal with the situation. So what can you do? So what can you do when you miss a signal? One, admit the fact that all traders miss signals, but what's your plan? What you can plan is basically can be built of like 4 different items. One, go to the next ticker. If you keep a small watch list like the Active Trend Traders do, you know you're going to have another stock or ETF that's lining up to make a move, shortly. So you just go to the next ticker. But what happens if you really, really like the move that's happening and you still want to play and get into the entity that you just missed the signal on? Well, one, don't chase. Wait for a second chance entry. Or some people call them alternative entries. I like to call them a second chance entry. Secondly, understand the criteria for the second chance entry and define a line of demarcation to work off of. And then number 4 is adjust your expectations, apply solid active trend trading exit rules so that you have covered a stop loss and a profit target. And when I say adjust expectations, if you miss the initial move, you don't want to necessarily think it's going to run, if you're expecting a 10 or 15% move off the initial move or the initial trigger, and you get in a little, on one of these second chance entries, well, you need to dial that down a little bit. That 10 to 15% move, maybe be looking at maybe 5 to 7%. And I'm talking about intermediate swing trades. If you're tackling longer trades, you've got some other things to play with. And then finally, always remember, there is no holy grail of trading, only tools and rules. So let's take a look at what this kind of thing looks like. We recently have had some really nice upticks in TQQ, which is the 3-time leverage ETF of the Qs or the NASDAQ. And back here on the 18th, or actually the 17th of April, we get a signal that's saying, okay, stand by. We get a tick up on our TSI. These are all entry criteria for the active trend trading. So we get a tick up on the TSI, momentum starts to roll up, and we get a green candle closing above the red dot. And then the next day, 417, that's our day of entry for a regular move. Now, if a person would have jumped on that move even at the end of the day, the price of the entity would be up about 8.5% from here. So anyway, so here's an area that we'll keep in mind. What could we do from here if we miss that move? And then secondary, let's go back under here and also look. There was an entry also back in early 2017 on January. And we'll take a look here to see if there were any clues that would have gotten us into a potential trade right there. Well, the first thing I said, define a line of demarcation. I like using the 8-day EMA as a line of demarcation, that if it's all the moving averages are stacked in a bullish condition here, and as soon as I get the trigger and get into the trade, away we go. But if I miss this trade, I want to look at basically I can trail an entry with a stop limit that's maybe 50 cents above that 8-day moving average, and that way if it comes down and approaches it, that'll get me into the trade. And then I would carry a stop loss on that in size appropriate, where if I move, apply some of the active trend trading rules, but the worst case would be a 5% stop loss and or a stop loss below the most recent swing low. I track along here, and let's say I miss these here. Well, I get this another pullback on the 12th of January, and then it continues to move higher. And you can see that it's continued to move higher all the way and for several weeks now, actually months. There's another area. I get a pullback right to the 8-day moving average. That's my second chance entry. And so on this particular move, what would have taken if I would have gotten this particular second chance entry here on the rebound, even if I got in on the upside on the 1st of February, it went on to, in a very short period of time, went up another 12%, 15%, and if we go all the way to the top of the high, about 17%. So that's what we want to be looking at. So in those areas, but is there something else we can also be doing? Well, yes, there is. I'm going to pop this open really quick here, and we'll see that same areas, these purple dots, include the same areas that we were looking at on the larger chart. Well, if you go to that intraday chart, I'm using a 1-hour intraday chart here, and as I say, here's that congestion around the red dot where the original signal was, and then shortly after that you get a pullback, and I like to use the 50-period moving average on a 1-hour chart, which equates to approximately the 8-day moving average. I get a pullback, next morning a pop up. Well, that would be my secondary entry. This one would have been a little bit more challenged the last 2 days when the TQQs gapped up and continued to run. But that what I need to be watching that. I get the pullback. If I get a break of this little flag here, that's my secondary entry. Let's go back a little bit further and see what the other purple dots have to offer. Okay, here's that one in, when was this, last part of January. You get a pullback down, it overshoots this swing low, but then starts making it back up. I can apply the same rules to the to TQQ or to the entries on any entity that I utilize for the daily chart. And here I get the TSI turning up. I get a green candle closing above a red dot. And if you want to find out more about what that indicator is, you got to become an active trend trader. And then we get our trigger to move into about 9 o'clock and 11 o'clock in the morning. Now, if you're not where you can watch the market to be able to take advantage of these intraday moves, you wait till the next day, and you just basically, okay, you can define your period, an approach. There's a 74.06, and that's within 50 cents of the yellow line, which is the 50-period moving average on an intraday chart, which equates to the 8-day. That was my approach, and that would have been on 2-2, and then you would have been on that trade. But any pullback into either the 8 to 20 period moving average, let's look at that one from the very beginning of the year. What do we get? Yep, there you go. You get your initial entry signal here. You can move in at this point on the gap up the next morning, or let it pull back and then take a trade into the end of the day as you break through here, or breaking above the 50-period moving average, which is a break above the 8, and you'd be in that trade continuing to go up. So, and a trade for that would have been, a very short period of time, a good 8% over a 6-day period, which if you're a swing trader, you like those kind of trades. So that gives you a highlight of what I'm looking for those second chance entries. And so hey, if you like this tech tip, please, if you found it helpful, please like it. and also share it with your trading friends. We'd really appreciate that. Remember, the Active Trend Trader, our motto is clarify, simplify, so that you can multiply. We focus on growth stocks, top-notch ETFs, especially the leveraged ETFs, options. Here's the website. Here's my email address. If you want to contact me, just drop me a quick note to ask any questions. And as you probably know, I am in Hawaii, so mahalo from me. Have a great trading day. God bless everybody.